As of late November 2024, the S&P 500 and NASDAQ exhibit mixed dynamics influenced by sectorial rotations and macroeconomic factors. The S&P 500 has shown resilience driven by robust earnings in tech and healthcare sectors, and expectations of moderating inflation suggest potential upside for equities in 2025. Meanwhile, the NASDAQ has outperformed in recent weeks, boosted by gains in AI and semiconductor stocks, although valuations remain elevated, raising concerns about sustainability. Analysts remain cautiously optimistic, highlighting the importance of an economic data and Federal Reserve policy direction, with the market expecting a pause or even rate cuts in the near term. G'day folks, welcome back to another update on the US markets. Before we go any further, make sure you hit that like and subscribe button and stay to the end of the video to see what we have on offer from the Patreon page. So here we've got the S&P 500 on the monthly, weekly and daily trends, and we look at the trends primarily for trading direction. So here on the monthly, we're still bullish. It has been that way since late December, in December 2023. So very bullish, a bull run since then. I've drawn a Fibonacci retracement. You can see there we've got up, let me just expand that. On the CCI, I've got lower highs on the CCI versus higher highs on the price, and that's a bearish divergence, and we expect it to break to the downside. Now I've drawn a Fibonacci back to that point there, which would have been the previous low, significant low, before that divergence started. And the minimum retrace we can expect, assuming it starts pulling back from where it is at the moment. And again, as I said, it's bullish, so it could keep rising. If it pulls back from where it is at the moment, that'll be the minimum retrace to that level there, which will be 23 to the 38%, which are respectively 51.19 to about 45.58. Sometimes it breaks through that level, other times it just stays in there and then it bounces out of that level in terms of a divergence. On the weekly, we have another bearish divergence, lower highs on the CCI versus higher highs on the price. And you can see there, that's almost hit a double top there on the weekly as well. I haven't drawn a target for that yet. We did have another bearish divergence back here. You can see there in that little range between those peaks on the CCI and those highs on the price. And it actually pulled back and hit that 23-38% level. And I've left that target range in there as a historical indicator. On the daily, we've also had another bearish divergence. Now again, these on different time frames are all independent. They're not necessarily aligned. So on the daily here, we've got another bearish divergence, and that's hit a double top off that key resistance at 60.26. And I've drawn a target area there already if it pulls back down to that level there of a Fibonacci level. So that'll be the minimum retrace level, assuming it pulls back from where it is. As I said, it could keep going higher, and that's always a possibility. And as soon as that CCI breaks higher than that point there, you can see there it's currently a double top. If that keeps rising, if the price keeps rising and the CCI keeps rising above that previous high there, we can then invalidate the divergence. But at the moment, the divergence is still in play. Now on the intraday charts, if you're trading on the 1 hour or intraday charts, trade in the direction of the daily. So here the daily is showing bullish momentum. The CCI is above its moving averages, so you only take long trades. Now, since our last video indicated by this vertical line, you can see that the price has bounced. Now, we did have a bearish divergence here. If I blow this up, we did have a bearish divergence here, lower highs on the CCI versus higher highs on the price, and the price retraced. And again, just for those new to the Fibonacci retracement, if I take it back to the significant low before there, you can see that's the 23-38% level. In this case, it bounced and it broke through the 50%. Almost went as far as the 61%, then it bounced, and currently hitting this double top, as I said. And currently it's just poking its nose above that. But notice as well now we've got another bearish divergence playing out. If you measure it to that point there, and the same level here, lower highs on the CCI versus higher highs on the price. I've got a smaller level divergence, bearish divergence. So again, at the moment, taking only long trades in line with the daily trend. So you would have taken all these long trades where it's highlighted in green on the CCI chart. And when you close the trade, I prefer to take the close when a CCI breaks into that moving average range. So for example, you would have taken a long entry on that candle, and you would have taken your profits when that CCI broke into that one of those little red candles up there. You would have taken that profit from that CCI range. Similar sort of story for the NASDAQ. Here on the monthly, we've got a bullish move with the CCI above its moving average and the price making new highs, but notice we've got a bearish divergence, lower highs on the CCI versus higher highs on the price. Now I've already drawn a target area for that, and that's the 23-38% level, should it start pulling back from where it is at the moment. So as that price keeps rising and the CCI keeps rising, we're going to then extend the Fibonacci range. On the weekly as well, we do have another bearish divergence, lower highs there, higher highs on the price. I haven't drawn a target area for that yet, but again, once we see a bit of a pullback, I'll start drawing the target areas. On the daily, I have drawn a target area for this one. We've had a longer term here on a daily, lower highs on the CCI versus higher highs on the price, and that's the minimum retrace level. Now, in this case, the CCI is still dropping, even though it's showing a bullish momentum at the moment on the daily. The CCI is still dropping, even though the price is rising. So we may actually see it rise a bit further, then pull back. And if it does, we expect this to be the minimum retrace level if it does pull back from where it is. Like I said, if the price keeps rising and the CCI keeps rising, especially if the CCI rises higher than that point there, then we're going to invalidate the divergence. But at the moment, that divergence is still in play. If we go to the intraday charts, and again, we're using the 1 hour as an example. Only take long trades from this point on based on the daily. So you would have taken that long trade there, for example, similar to the S&P, going long there and closing it out when it enters, that CCI enters into that moving average range. So you would have closed it out on that red candle. Another long entry there on that candle, and you'd still be in the trade at the moment. And again, wait for it to break into that moving average range to close out your trade. To support the channel more, hit that like and subscribe button and share the video. For added benefits and the cost of a coffee, consider subscribing to the Patreon page where we look at weekly scans of bullish trending shares and insider trades that may have occurred. Thanks again, and see you in the next video.